Hello and welcome back again in the episode 10 of the basic concepts. Today we're gonna go, as you see by the title, into a very, let's say, popular topic, and they're called fair value gaps. So fair value gaps. The word says it. We're gonna see now on a chart what it is. I'm gonna try my best, of course, to explain them. Fair value gaps, it's a pretty long topic. There is higher time frame fair value gaps, lower time frame, inversion fair value gap. There are so many things attached to them, why they happen, why we have this thing called fair value gap, what implies a fair value gap, what is a story behind the fair value gaps. So most of the things I'm going to speak into the advanced concept. This playlist here just to get familiar with some terminology, familiar with some concepts, and then of course we can move on to the full model and advanced concepts in the next playlist. So I'm probably also, if you're here if you stumble on this video to get the strategy and you already know and everything, or I already have the advanced concepts or playlist fully done, or you can just review the trade recaps, because in the trade recaps I just speak and say everything that what happened, what I think about the day. And so if you're for that, feel free to watch those videos. But if you don't know what fair value gap is, stay here and I'm going to explain you why. So as we can see here on the chart, we are on the 4-hour time frame. So you can see here the time frames. At the start I always doubted where I can see what every time frame means. So here on the 4-hour we have here. So let's see this candle, this 10 a.m. candle. As you can see here, this candle is a little different than the others, okay? It's a very, we'll say, big candle. We call those sometimes Drake candles when it's a displacement candle, okay? So, but if you look at the prior candle and the candle after, you can see that this is where they talk about, this is the body, okay, the color part, and these are the wicks. So a fair value gap occurs when there is space, so there is a gap between, in this case, the bodies, or the wicks, in this case the wicks, of the previous and the candle above. Sorry, I'm going to say it again. There is a gap between the previous wick and the wick after, of the candle after. So in this case, we can take our tool, we can see this one here. You can find it here on the shapes, the rectangle. You can use whatever color you want. In this case, for a bullish one, I will use a green one. Then you can adjust, of course, the opacity. Don't keep it that much. I'll just keep it like here, 40%, 50%. And this is your gap, okay? So you can also modify it. You can put the middle line. That's very important. You have to have the middle line because this is the 50% of the gap. Some people call it consequent encroachment. It's also very important to know and what and how the candles after react to the top of the fair value gap, the middle, also the middle of the first quartile, and also the middle of the second quartile. So it's very important. Sometimes we feel it, sometimes we inverse it, sometimes we just react. So this is more, again, as advanced concept, but here we want to just know what it is. So this is your fair value gap, okay? This is your bullish fair value gap because it's a bullish displacement. In this case, we have a smaller one. We have the previous candle wick, candle after wick, and this would be a bearish fair value gap, okay? So price created an imbalance, okay? So usually imbalance happen when we have, for the moment we created, one-sided direction. So we are more in bullish order flow, okay? So fair value gaps are also indications of where kind of price wants to go. So if we respect them, if we inverse them, if we just touch them, if we go to 50%, you can see here, we are on a 4-hour time frame, but this applies in every time frame. As you can see here, the candle after just barely touches. You can see here, barely touches the candle and rejects. Then the candle after goes to the midpoint perfectly almost and rejects. The candle after, again, midpoint rejects. The other candle has this huge wick. This is kind of an exception. So it goes, fill the gap, and takes this high, and then boom, closes again below. And then we have this absolute banger of a Drake candle that just goes through it and creates its own gap. As you can see here again, candle after, respect it and pushes higher. This candle, leave it. Here we have another gap. In this case, it has been inverted. You see the next candle closes below. Okay, so we talk already about candlesticks. But here, boom, reacts, boom, reacts, boom, reacts, boom, reacts, boom, reacts. Okay, you can see here so many times, 1, 2, 3, 4, 5, 6, 7, 8 times we reacted from this gap. Okay, that's very important because we can have future references for future days, because this gap was of Tuesday, but it was useful for Wednesday, for Thursday, and could be also useful for Friday. So that's basically about what a fair value gap is. So it's a gap between a fair value. Okay, so we can also move on in every time frame, on the hourly and on the 15. On every time frame there is a gap. Different time frames have different meanings. The 4 hour, the 1 hour, we can also sometimes use daily or weekly, are more important on your bias, on targets, and also the 15-minute can be used. You can see here during London we create this 3 fair value gaps. We can say, as you can see here, price here respects 1, 2, 3, 4, 5. So it takes, see how many times it touches and then rejects, 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 goes into it, midpoint rejects. This is a kind of a shy candle, does nothing much. This candle here goes and reacts from the midpoint, almost the midpoint of the other quartile. So it's first quartile, second quartile, and rejects. And then again here, this candle closes below, and then boom, this places down. This candle up, rejects, up, reject. You can see I could stay here hours and hours saying how many times price rejects or reacts or inverses or fills the gap. Okay, so filling the gap means that price will go through that gap. Okay, so in this case, almost this case, if you can see this gap here, price goes up, comes back into it, arrives to the midpoint, the body calls the midpoint, goes also a little below. In this case, the gap is not yet filled, okay? So it's not fully filled. So it could also be a nice target for after. You can see here, price goes, and boom, fills it. So in this case, now the gap is filled, okay? So when price reaches this level, the gap is filled. In this case, it would be nice, we inverse this and this gap. So this, we are disrespecting bullish PDRAs and we are respecting bearish ones. So the overall order flow for London going to New York is bearish. And as you can see, it was Friday, I think. Yeah, Friday was bearish and we catch a nice trade Friday. So yeah, this is a bit of some examples and some basic terminology for fair value gap. So fair value gap again is an imbalance in price. We can go on 1 minute, and price tends to react to disrespect, to respect the midpoint, the first quartile, the upper band, and the upper part, the lower part. As you can see here, this was could have been a trade this here. Okay, yeah, entered this trade. You can see here we get liquidity down here. This is news candle to just fill our orders here, take people out, and then you can see how here 1, 2, 3, 4, the 4th time price skyrockets here. Then we create a 5-minute gap here, we inverse it, and this can also be your entry at the retap. You put your stop. I would have put it above this candle. In this case, kind of gets lucky, and you can aim for this low here, for the news low, and boom, this works if you keep your stop where it is and don't move it. But yeah, I mean, fair value gaps are very useful. Not every gap is useful, okay? So many of them you need to add context behind. This is a very, very long argument. It's also out of experience, but I will do dedicated videos, especially in the advanced concept, for every little thing, and go deep into that concepts and explain as much as I can. And so yeah, I look forward to speak for that. This is just the basic. Just see what it is, how it looks, what is a bit of the terminology. So yeah, I hope this could be useful. And I mean, I'll see you in the next episode.